What is going on, everybody, and welcome to another weekly update. What I like to do in these videos is provide you events for the upcoming week, whether that is Fed schedule meetings or if that is earnings, and provide you stock picks for the upcoming week to get you prepared. That sounds like something you're interested in. Consider subscribing, as I do provide daily updates as well, because in this ever changing market, the sentiment is flipping left and right. So let's get right into it and start unpacking the past week. There has been a lot going on. It's been a very historical week in the making. First off, to kick it off, the biggest event we waited for all week was Powell in the Fed. They came in at a 75-point basis move, ultimately understanding that the 75-point basis move hasn't been done since 1994. We are living in an ever-changing environment, trying to combat inflation, and we continue to wonder why the market is being driven down. And we have to understand that uh, the Fed in themselves, and even policymakers at that, they can only focus on one particular thing at a time, whether that is in employment or inflation. Obviously, inflation is the biggest concern here. So all it's essentially an all-out go for inflation. So what is going to suffer is ultimately going to be the market. The market is at the mercy of rate raises until inflation is combated and got a grasp of. The market will continue to sell off. But it's not saying we could rally. It's not saying that any kind of positive sentiment at this point will make the market rally. So just be mindful of that. You may continue to get negative news, but all we get is one essentially event that brings hope, and this market will rally. Not saying it's going back to all-time highs, but we have to remember that the market is kind of in a desperation mode for positive sentiment. Being said, 75 points is what was addressed on Wednesday. And the reason being for that is because we had a warning shot last previous week on Thursday. The ECB came in and started raising rates, which is something they haven't done in a very long time. That was our warning shot. We talked about it last Thursday. Then last Friday, we had the core CPI come in higher than previous at 8.6, beating expectations by a lot. And understanding that that is essentially the gauge telling us that we haven't reached peak inflation. It is just the beginning of summer. Things are going to get worse before they get better. So essentially, it kind of left the Fed with this idea that no matter what happens, that they need to start raising at a bigger rate than they currently were. And so it was expected a 75-point basis move would come in. Luckily, the market likes to play worst case scenario when things being talked about. So we did have a 75-point basis move, something as you can see here. I've been marking where I feel these moves are. And, coming into this meeting, we sold off right on Thursday. We got that news about the ECB, and we sold off. And then coming in, we started hearing about. We chopped around trying to understand what was going on. Core CPI came out, and we just dropped from that point. Then obviously we chopped. We were waiting to see what was going to happen with the Fed on Wednesday. And again, we got the 75-point basis move. The funny thing is on Wednesday, as soon as that report came out on Powell, we went and tagged the 75-point basis move because that's exactly what came out. But what drove the market to do this and drop another level, and we were trying to determine if we had already reached a 100-point basis move on this move. But I think more so we reached it on this move because we said, or I had pointed out, that if we went by candle bodies, we would have reached it on this drop. But that obviously was not it. 100-point basis move is roughly around the 36.30 mark. It's kind of what I was talking about before. And then we hit that. But now the bad thing is we are grinding up against this major support. And I've talked about this multiple times. I bring this up every time any kind of stock does this. You don't want these candlesticks to be grinding against any kind of major support. Typically, if there's demand, these things don't even touch major supports. So you have to understand that. So if we are touching this, this is a really bad sign. And the reason I believe it to be in what has changed the sentiment of the market is Powell's essentially forward guidance on what's going to happen. Right, we were looking really strong up here until we heard about the ECB. Then we sold off. From that point, we started getting core CPI. So the market sentiment changed here. It was blatantly obvious. The market wanted to rip. There was strength. There was demand there. But as soon as that market sentiment, we just started sinking back down. 100 points priced in. Worst case scenarios, because there could strongly be a potential for the next Fed meeting that's what we need is a 100-point basis move, because we haven't gotten through all the way through summer, so there's going to be some bigger changes potentially on the table next Fed meeting. So like I said, the market likes to predict worst case scenarios, get those tied in, and then start rallying from that point, like by design. Now, problem is that you're hitting this 100-point basis move, and the fact that Powell is left the gate open on a lot of things. They are not leaving anything. He's talked about it, but what's driving this is the action of the Fed. This is starting to scare the market. You're going to get to a point, and I'm thinking we're getting to that point, that if we break here, we break these technical supports, this 36.46, or we break this 35.69, because the bounces were very weak here. If we don't break out of here, and actually I can pull up the daily here, this is not a good sign. We broke below the wedge. This could be essentially a retest we had on Friday. If we gap below this 36.41 mark on Monday, we're going to start seeing panic. This is a straight panic. This break was a panic. You have to understand that since the market sentiment has changed, since Powell has essentially kind of thrown out a very hawkish general statement about, so we're going to pretty much do whatever it takes. They have done that throughout this year, and you've seen what the Fed has done. This is what the Fed does whenever it takes. You see massive selling like this. You break this, you're going to see panic, and none of the selling is going to make sense at that point. The market is in sheer panic. So you have to understand, we break this, we don't care about basis points anymore. This thesis is essentially out the window, because now it's sheer panic, right? When you start hitting critical levels and breaking, you start hitting panic levels, and so you start seeing massive selling. So just be mindful of that. Again, because if it breaks that, it makes no sense, right? People are just ultimately concerned about everything, and actually feeling the fear of what's actually going on in the market. You have to understand that the market works like this. Sometimes it works on the market will get numb to a lot of news, and so it will work on a delayed response. And then again, why we rallied here, why we look like we were going to rally, because we had hope that we hit peak inflation. We would have actually been up here. This move would have been to the upside had it not been for that sentiment with ECB and the core CPIs. So now, doing this move, you reset all the data that comes out. So all the data is now reset to the point to where the data matters that comes out. It's not going to sway the market really heavily. I mean, it's every time a report comes out, you get a lot of this wick back and forth. But the next couple of reports that come out, I think, are going to weigh a little bit heavier because of that, because of the market sentiment change, and how hawkish Powell is going to come in with the rate raises. They do emergency rate raise, right? That is going to show panic. We don't need to be, the Fed needs to be doing emergency meetings, right? I'm not saying that they have, but if they do, you're at a panic level. This is a panic level. We break this is sheer panic, and we break that, we have a very long ways to drop from this point. So you have to be very careful. Again, when we break this level, you do have some support here at the 35.65, some support here at the 34.21. You get some minor supports here at 33.55, but your next like major support is down here at the 3250. So be mindful of that. We could drop a lot. And again, if we do break this level, you do break that monthly 50, the 200 weekly, I think you can flush almost straight down to the 50, which again is sitting at a 35.60. So you're going to get a pretty solid flush, I think, here pretty quick. And then here, you're going to get a bounce, retest the 20. And then again, if sheer panic kicks in, we're just going to start melting off. So we have to be careful of that. We want to be able to hold this level. I said I didn't think we would break this. But now that the market sentiment has changed, people go full fear mode. You have absolutely no control over full fear mode. This is why flash crashes and everything else happen. Not saying it will happen, but we have to be very cautious around this level and just be mindful that it could potentially break and start selling. Now, with all that being said, I know that was a lot to digest. But the next biggest thing we have to realize is Q2 is almost over. We are in the last 2 weeks of Q2, and then we have the next biggest thing is we start rolling back into earnings mode. And what has been happening is normally you have a pre-earnings run up, and that is typically only 2 weeks out. But you have to understand that with essentially the way everything has been set up with the Fed, that these earnings run-ups are very random, and they come in right after a Fed meeting, because that's the only time where you're really not going to get any news. And we saw that the last couple earnings where you've had random like run-ups like this was way before not this particular move here, this rally here, right? We had earnings and we rallied hard. And then before earnings, and then we start getting a lot of rate raise talk again, and everything just starts selling massively. And then we had earnings, and then we're gonna go 50-point basis move, and so we just started selling again. Where's our 50-point basis move, or 75? Right, anytime 75 is mentioned and continuously mentioned, the market sells down to that level. We only did 50. We popped, and then we reached a peak inflation. You could see the strength again, like I said, around this area, but then we just completely sold. You saw strength again here, but then we completely sold. So that's something to keep in mind. And then again, I don't like where we're sitting here. We broke that trend, retested it. We want to hold this level. Again, we start breaking these levels, you're going to start really hitting into panic levels. So that is what we got coming up. It's going to be a short week, which leads me to believe that we could potentially have some sort of rally, which could lead us to believe that we had some sort of rally and really start pushing up here. So that's something we need to watch. Monday market is closed for Juneteenth. Wednesday, we have Fed Powell testifies on monetary policy in the Senate committee. So that is going to really have a lot of weight on Wednesday. So just be mindful of that and see where that is. Normally, I believe that is actually in the morning around 10 o'clock. I don't know, I have a time on there, but that is in the morning on Wednesday. Again, Russia-Ukraine stuff, anything changes on that front. One thing to keep in mind here is Putin does have an announcement, I believe, on Saturday, which may change the market. And that whole thesis there is that Powell is battling, or not Powell, but Putin is battling cancer. And there's some video coming out of him looking weak. Again, you can't really go with whatever is said, because a lot of times it's not very accurate when it's reported on Russia or Ukraine. So there's that watch list. SPX is 119. So we still got a lot of volatility in the market. Tesla 53. I just put these two on here to kind of give you a sentiment of what's to look for in value and what to look for in the banks. BA is looking at 60. BA has had a lot of good news. So value has been pretty strong. Banks have been holding. Again, it's only pricing in an upward move of 4 points, which kind of bring it to that top range. So just kind of give this week, kind of given just general like market setup. Considering it's a short week, we could actually get a bit of a rally. I'm really hoping we do get a rally and pull ourselves back out of here. Again, we don't want to be running against this, because it's going to create sheer panic if we break. And also one thing to consider too, anytime you are sitting up against major supports, you have to understand the way institutions work. Institution and banks, they sit underneath these major supports, and they purposely drive fear, whether that's through media or wherever the case is, to flush because people have stops. If you don't know what a stop is, people essentially set stops right under these major supports. So if it breaks, they get tagged out, so they don't continue to sell off and lose, their investments, lose their gains for the year. Not to say that today's been a great year for gains, but so people typically will set stops for that. So being said, the bank and institutions know this. And so what they like to do is they will essentially stop hunt these on major supports. You'll see massive pushes down and wicks. These things will wick right back up and just start pushing out of nowhere. You have to be mindful of this. That happens all the time. If you haven't been in the market, get used to it, because this is what happens every single time. That's not saying it will here, but the fact that you're sitting at a major support on a major index with everything going on, you break that, you're going to get sheer panic. And the reason why this happens is because they're trying to get liquidation to buy up positions so they can essentially leave everybody else in the dust as they go back to all-time highs. Not saying that will, but that is typically the manipulation that does go on. So again, let's take a look at Bitcoin here. Bitcoin again, it's around that 20K mark, holding. Looks just like the market, right? Bitcoin, you have to understand, is being driven by the market. You also have to understand that there is a lot of big stuff going on with crypto right now. Massive stuff. The underlying payment system, everything is changing. Bitcoin is not going anywhere, right? And people I know are maybe bad mouthing crypto and everything, and crypto isn't where people want to be, but you have to understand that there's a lot going on. Also, Charles Hoskinson's, which the co-founder of Cardano, right? He's meeting with the Senate on the 23rd as well. So we got another week, or he'll be meeting, I believe, on Thursday with the Senate. And that being said, there could be some big moves that happen on the crypto side, and maybe setting up Bitcoin and ETH as potentially surpassing ETH, if anything comes of that. So it's a very interesting event that is going to happen this week. Again, that's on Thursday. I believe it's also in the morning. Anytime they meeting with the center, I think it normally takes place around 9, 10 o'clock in the morning. It lasts for a couple hours, so just be mindful of that. So I want to tune into Thursday and kind of see what goes on in crypto. They're trying to do regulations and everything, and so if you got Charles Hawkins on there, Hawkinson's talking about it, it could be quite interesting on how this plays out. Again, I don't see Bitcoin. I see Bitcoin more as gold, and if you know the way gold plays in the market, it's not the greatest thing. It normalizes and doesn't move a lot. I think eventually Bitcoin will get to that point to where it's not. It's going to be no more normalized. You're not going to get as much volatility in it. So just be mindful of that. Again, it's just my thesis. Again, I think everybody needs to create a thesis and kind of run with that after the information they get. I think it's important to gather different sources of information and then try to build your own thesis off of that. Good and bad, right? I think it's good to hear the goods and the bad sides to everything, and then kind of take it from there. So let's go into Tesla for our essentially tech view on what's going on this week. Again, it's at a critical level. We don't want it to break the 622. It breaks 622. I'm aiming for roughly around 500. We do have 550, so you have the psychological points. So every 50 points or so, you're going to get a major bounce. And with Tesla, normally major bounces reverses it quick. So you have to be mindful of that. This is why I like to play Tesla and why I believe in Tesla, because during everything that's going on, they are one of the best companies to innovate. Apple has done a very good job as well. Can't not include them because they're building out their own ecosystem. They are doing stock splits to help them in recession. So you have to understand that when the stock splits don't really help you in the long run, but because they take out the potentially for massive run ups, or gets diluted. So just be mindful of that. But we shall see. So right now we've been really the nice thing about Tesla is it's really been grinding hard against this trend line, like it wants to break. Now that I think we're really close. I don't know if it's going to be this week, but I want to show some things that could potentially help us break out of here. One, we really needed that digestion. We have to understand too that the options expiration. So there's a lot of different things that are happening towards the end of the week that could just be driving. But the fact that Tesla is holding is a very good sign. So don't want it to break that. Really watch the daily and see if it does break out of here. Again, you need a full candle to land outside of this. You have to also understand that even breakouts are not working in this market. So even though if it does break out, don't expect it to start running. You have to give it a couple days to really see anything. This is why placing stops is extremely important in this market. Unless you're looking again that 5-10 years out, that's different. If you're investing, you need to be slowly accumulating. Never lump sum in a market like this. I know people like to keep saying and like to keep repeating Warren Buffett and saying the whole buy when people are fearful statement. Yes, but you don't want to just lump sum into positions at if you're not reading levels and stuff like that. You don't want to lump sum. You want to buy a little bit at a certain level, buy a little bit at a certain level. And if it breaks, you buy a little certain at that level, you buy a little certain at that level. It breaks, buy a little, no lump sum here. And then, oh man, it's back down here. I'm break even and then break. And then, oh, now negative, right? You want to buy a little bit and slowly average down. You don't want to be, again, lump summing into certain positions. Again, I think, you slowly accumulate right now. I think is a good spot. So again, if it does break sheer panic, yeah, you could get a discount, but you have to understand too that at any point, someone like Tesla is going to reverse, and when there's a reversal, this thing is going to go quick to the upside. And this is why I do like going with major brands that are well known to the average person. So I want to bring up QQQ too. This is something to keep an eye at, and this is why I think a potential rally could be happening. We're starting to get a ascending wedge, and ascending most patterns haven't been playing out, but these wedges, especially the ascending wedges, have been playing out quite well. So we're starting to get an ascending wedge on the daily. I think this thing could really break, and potentially, if it does start selling, could get a big move. This is where I think a rally could be in the midst, and why everything's kind of lining up as far as like a pre-earnings rally, because I think if we break here, we could start really selling back down to this level. You're going to get a big bounce up to 55, kind of what I'm watching for this. But you have to remind yourself that this is a higher high here compared to previous. So this could potentially be a lower low here. So any kind of pump we're going to get, again, I think we're going to get a mini rally for earnings, and then you're going to have to realize that the Fed is right around that same time, so you could potentially get another higher high here, is what I'm kind of thinking here. SQQQ, again, it starts pushing when the market starts selling, so this is why I bring this up. Again, for those people that want to trade shares, I think it's better, but you have to realize that this is also leveraged, so don't just randomly jump into this. You have to get approval for this to be able to trade this, but understand that it is a leveraged ETF. So just be very mindful of that and very careful with that. Always place stops and keep them tight, in my opinion. Make sure moves are hitting where you want. Don't FOMO into anything. Now is not the time to be FOMOing into anything. So, all right, the next one I do have, I want to look at BA value. I think it's important to start looking at some of these industries and seeing strength, especially when you don't want to be just randomly calling out stuff or chasing anything in this market. What you want to be doing is looking at the general market and seeing what is going and occurring right now. BA has had a lot of good news, and so it's driven up to some good levels here. You're kind of topping out here at the 141 mark. You have to be very careful. We did retest the 50. Again, first retest, you're going to get rejected. Second one, you have a strong possibility of breaking through. So if we can get BA to break back through the 145 mark, that would be very positive, and you start getting some strength and value. We need banks and value to start pushing. Again, they've kind of driven this market for majority of the year. Tech has just continued to take a beating. So again, if we do break back down, you don't want it to break back down before 135 because you can get some massive selling back down to 120. And then again, you start reaching panic levels. We don't want to hit panic levels and really start selling again. Remember, Back when the pandemic first started, BA was down at 100. BA is actually one of the ones I made a good uh, lump sum out of because of it hit the 100 and I grabbed it at 100. Again, psychological levels always work really good, especially big numbers like 100, 200 on the higher increments. Normally, typically, you'll get bigger reversals on those numbers. So just be mindful of that. And then JPM, I want to bring up the banks here, using kind of JPM as our main gauge here. Again, breakouts. This is why breakouts haven't been working this year. You did have a massive pump, but then everything just dumped and died. Again, normally breakouts would retrace 75% of that move, but you're not getting anything on this. So the nice thing I like about the banks is they are holding. JPM is holding very well. It's trying to break. You have to understand you have this pretty critical level at the 177 mark here. It's attempted to try to break it, but ultimately on a break, you want a clean break and a strong pullback, and then you want to retest. Normally, depending on how hard that pullback is after that break, determines on how hard you're going to get rejected off that critical level. And so right here, once we actually get a retempt to this 117, I think we get another hard rejection. The question is are we going to break back through this 112 and continue selling? Again, if we do that move, you're going to start creating panic, and then you're going to start getting massive selling. I don't see any potential flash crash, but you could get some pretty critical, just pure selling movements. Similar to flash crashes, limit down, maybe. Limit down, we have to understand that if you went through the pandemic and saw multiple limit downs a day, that is not normal. That is very rare. At this particular time isn't a time for, even if we get panic, I don't think it's going to be limit down panic. It's more so just the slowly kind of bleeding off, selling off. Like you get some heavy selling in the morning and then kind of slow down, and then potentially another heavy selling candle in the afternoon, and that's pretty much it. So just be mindful of that. Very long video, but there is a lot of stuff to unpack. There's a lot of stuff to be watching, trying to educate people on the general market and what's going on, what you should be looking at. There's a lot of information out there, general information that is not good. You need to be understanding why things are moving the way they are, and understand that changes too. That's not always the same. Even what I'm showing in this video is not always the same, but that's just the current sentiment. And that it really just depends on what's driving the market. And right now, it's purely just Fed and fighting inflation and understanding what is driving it and where to be looking. And again, that sentiment changes all the time. Every year is different. Every couple of months is different. Even trading this stuff changes all the time. It's not always the same. But as long as your trading is a solid process, it has to be a process, and you have to be dedicated to that process, and don't pull away from that process. If you want to be successful at all in any kind of trading endeavor, or successful at all, even investing, you need to know market sentiments. You need to understand where to look when things go bad. Right? If you were playing SQQQ all year, you were actually doing very well. Right, as opposed to if you were playing some of these other stocks that aren't doing well, and then wait for a bottom to hit, right? And doing if you're investing, again, not financial advice, but you do the small increments, that's really key levels. You have to understand you want it to sell off for a while. Something I talk about even with the cycles with earnings, right? You're going to get that pre-earnings run up, and then after earnings, you're going to get about a 3-4 week cycle. Or that stock is just going to sell off. If you're mindful of that, why would you hold it all the way back down and give back all those gains that you just got? You have to be taking profit along the way, in my opinion. Again, not financial advice. This is the way I do it. Or you can hold, if you're just long-term, just want to throw it in a corner and don't want to manage it, then just slowly buy key supports. And I think even still, even doing that, like if you can just learn something as simple as setting a stop, and set a stop at those critical levels, so you're at least break even. You're not going red on these positions. A lot of people are taking massive hits on investments for this past year. and you got analysis that are telling you to buy at the top and continuing to buy. If you slowly buying it, yes, I think at the end of the year we'll finally get some traction and start pushing up. But you have to be very patient. So nonetheless, if you made it this far, I really appreciate you. This video is very long, so yeah, appreciate you. Drop a thumbs up, and until next time, I'll see you guys later.